Hello and welcome to this session, which we're calling Where is the S in ESG? Environment, social and governance. And yet too often we forget about the fact that there is something called social in this ESG acronym. With me to discuss how important this is Roberto-Leva, who is an investment specialist at the Asian Development Bank, Shona Tatchell, the founder and CEO of Halo Trade, and we were just chatting actually and saying that Shona and I actually set up our companies Coriolis and Halo Trade at pretty much the same time, and we're introduced, and we can remember our first introduction at a coffee shop at King's Cross Station in London, and Hussam Sultan, who is the regional head of commercial banking at CIMB Malaysia, and all of you have a very strong interest in the whole sustainability agenda, but particularly from the social side. And I think there's a huge amount that's being done around this. So we've had COP26 over the last couple of weeks. We're coming to the end of all of that, and it's put sustainability on the front pages of all the newspapers. So far, so good. But we know that ESG is about so much more than just climate change. And I say just climate change. I mean, climate change is a big issue. But one of the reasons why there's all of the difficulties in coming to an agreement right now at COP26 is because we've seen the rise of populism, we've seen the rise of fragmentation, nationalism, all the way around the world. And the reason why that's happened is because of inequalities. Inequalities in access to healthcare, inequalities in terms of access to education, income. We've seen huge human rights issues beginning to emerge. These are all things that are areas that we have to think about as we're beginning to help trade to become sustainable in every sense of the word. I think it's an absolute privilege to have you guys on here, but I think I'd start with you, Shona. What are the big issues in capturing the S in ESG? Because that's what Halo Trade does.
It does, and thanks for your introduction, Rebecca. And it's such an appropriate time to actually be addressing this this issue, because everybody is talking in the last couple of weeks. Everybody is talking finally about climate. The S is the human part of ESG, and climate affects society. It's a human problem. The climate refugees that we're going to see in the next decades to come, people leaving their countries because they become unlivable places with droughts, with high temperatures, flooding, wildfires, rising sea levels, wet bulb humidity. This is a human problem. The two things are inextricably linked and cannot be separated and cannot be addressed independently. Eventually the very air that we breathe will become toxic, as the rainforests die and phytoplankton dies with rising sea temperatures. So human rights and the social aspect of this is about all of us. If we can't treat our planet right, and we can't treat people right, we have no future. So, unfortunately, the underlying causes in all of this is the same. It's about exploitation. It's about us not taking care of the resources that we have, whether those happen to be planetary and environmental resources or whether they are our people resources. The S is about doing the right thing. The S is about ethics, and it's the really important thing for us here is that we don't end up in a social washing situation. Yes. A new word. Not nearly is being done enough today to help people to adapt to the changing climate, but also to just live in the world that we've created. There has to be an economic incentive everywhere to change. Just as we're focusing on incentivizing carbon reduction, we've got to focus also on incentivizing an improvement in the way that people are treated. We've got to keep people safe. We've got to pay them properly. We've got to give them rights. We've got to give them a voice. We've got to give them decent workplaces to operate and enough money to live. and educate, be educated. And if not, why are we not doing it? So Halo, as you can see, I'm sort of quite passionate about this, and that was really the founding principle of why Halo came into existence, was to really address these issues.
It's absolutely clear that you're passionate about all of this, and you ask the question why we have got into this situation, and you ask the question, how do we do something about it? And I think to myself back to when I first started studying economics 500 years ago, and the issue then was, well, I mean, you can think about this sort of 80s, 90s economics was all about supply and demand. It was all about markets clearing. And I remember one of my tutors saying to me, don't bring ethics into my classroom. Economics isn't about that. Can you imagine, Shona? So, I mean, that's the basic principle of Halo trade, isn't it? You do bring ethics into the classroom. You do bring ethics into the trade finance supply chain. So explain a little bit about what you're doing, so that, because it's also a very great delight in these sessions to introduce people to each other. And Hussam and Shona haven't met each other before. So Shona, do tell Hussam a little bit about what you do.
Yeah, so Halo, so I created Halo with the underlying concept really is to use the power of finance effectively to change behavior. And that behavior that we're looking to change, whether it's exploitation of the environment or whether it's exploitation of people, ultimately we're looking to leverage that power that exists within trade finance. And it could be any type of trade finance. Wherever there is, let's say, asymmetry in financial advantage, Halo can tap into that in order to actually incentivize behavior change. So that may be, for example, offshore pricing versus onshore pricing. It may be large MNC versus small SME. There is pricing disparity, and that can actually be captured, quantified, and then channeled back to those who need it. That's what our technology does. And in order to do that, we have to do it conditionally. There have to be strings attached to that financial incentive. And those strings are what our technology essentially build and operate. The strings have to come, they are triggered. That trigger mechanism is based on data, and that data has to be true. That data has to be real. It has to be fully transparent. And this idea that we can exchange data in return for financial benefits lies at the core of our system. In order to, I mean, there's an ocean of data out there in the world. There's data everywhere, but capturing the right data in the right form that you can actually then action and do something with is critically important. You have to be able to shape it and use it for the purpose that's needed. And our system collects data in some situations, and Roberto and I can talk about that in a minute. We've actually had to build our own mechanisms for capturing that data, but it needs to be constant. Audits are fantastic and absolutely necessary, but they're not good enough. If audits were good enough, we wouldn't be in the situation we're in today. A one-time snapshot of the status of whether it's of a factory or of a farm or a fishing boat, that snapshot doesn't give us the true picture. So we need a continual stream of data, and that's what we're capturing and then verifying, because we know where it's come from. We know who generated that data. We verify it, and then we use the data to drive a scoring and pricing system and a financial benefit system, working with banks as partners. So we don't provide the finance, we provide the mechanism to be able to actually capture that data, shape it, and engineer the benefit. Long explanation, but that's what we do.
It's absolutely fantastic, and you can see why Shona and I hit it off so much, because essentially Shona is the micro end of scoring for ESG, and Coriolis is at the macro end of scoring for ESG. But this isn't about Coriolis as such. Roberto, maybe I could come to you. I think Shona's raised the most important point of all, which is we have to incentivize all of this. We have to make sure that it isn't just an extra layer of due diligence. It has to be triggering something in the business that allows it to change. So what's your experience of all of this?
So, well, no, thanks very much, Rebecca. So, well, Shona and I will speak then about our practical, let's say, collaboration in terms of how to incentivize good behavior in the supply chains. But it is true that, like, we don't want to just have it as an extra layer in the due diligence, but at the same time, I think that it's an important element to underline in how banks understand their clients' business, and that they don't underestimate the risk that could be involved into social aspects of the activity of a corporate. Like in ADB, for example, we've been looking closely at the labor element in terms of how can we stop child and forced labor. Okay, so our first understanding is like, the best way to tackle it from an holistic perspective is kind of ensure that the banks that we work with in emerging markets understand the element of the due diligence in their discussion with their clients. So what we are trying to do at the moment is to incentivize better understanding of the practices used by the corporate client in the supply chains when the bank providing financing to such corporate clients. So we are launching a pilot next year to kind of like have a better understanding and the training of our partner institution in how to tackle this risk from their perspective. So to kind of report back to international bank what they're doing, and from how to educate them in performing this due diligence, actually having some understanding. So it's a combination of a lot of training, to be fair, and a lot of like webinars and sessions to kind of promote the activity. I think to a certain extent, it's going to be like what happened a few years with the money laundering activity. It's kind of like the first push that you get is like, why are you asking this question? But once it becomes an industry standard, it's going to be more incorporated and embedded in the whole risk profiling of a client, as it should be. Multilaterals such as ADB have the important task of promoting this industry change, and not saying that there are not already, let's say, activities done to manage this risk, but there needs to be a better standardized approach and better consistent approach across the chain, because you just need like rotten apple and the whole supply chain gets infected by a bad behavior.
Hussam, that ties in very much with what you're doing with SMEs as well, doesn't it? This whole education point, the non-punitive scoring of SMEs to make sure that behaviours are changing. And this is where I think that maybe the blah, 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 we had a bet beforehand that we would say blah, blah, blah a certain number of times during the course of this session, but maybe the blah, blah, blah of climate change is actually hiding the fact that banks and fintechs, or let's call them sock techs, because they're ones that actually want to change society, right? They want to change the way in which we go about doing this. And I'd say Shona's Halo Trade is definitely a sock tech business. I'd like to say we are as well. So Hussam, what does CIMB do around all of this space, and do you recognize what Shona and Roberto have been talking about?
Absolutely. You see, I used to refer to the S in the ESG as the sensitive rather than the social, because it crosses many sensitive areas: political, legal, cultural, all of these issues, and what's acceptable in one country may not be acceptable in another. What's exploitation in one country may be acceptable in another country. What's child labor in one country may be a social necessity in another. And hence there is one of the biggest challenges is how do we agree on standards for this? How do we measure that? What is the way that we could? You see, the acronym ESG itself is an investment asset management acronym. So in that sense, it's a disclosures game. So you go, you see if they have the policies, you take and find, and they've got the policies. Whereas in a commercial banking setup, like, for example, in my case, it's a relationship-based banking with our customers. As Roberto said, we have to establish that relationship with customers. We have to educate the customers, sometimes on a one-on-one basis. Sometimes we will have to rely on the demands of another market to push certain agendas. And sometimes we will use the fact that, to enter other markets, you will need to adhere to certain global standards. So that then became the entry point here of education through global standards. But then what global standards? There may not be enough agreement in place for what constitutes global standards. However, the United Nations SDGs, the Sustainable Development Goals, have given us some foundational grounds there for us to start the discussions. We identified a few SDGs, and then we listed a number of issues. We identified areas of immediate change that we expect from ourselves and our customers, whether in access to employment, gender equality, issues to do with human rights, exploitation, the rights of employees, access to education, all of this, employees' welfare. I think the COVID-19 situation, we've highlighted it actually more than anything, although it was a global pandemic, but most of the reported cases in some countries were coming from labor camps. Some countries, they were fine. They've even had dual reporting, the society in general and cases reported in labor camps. Now, these are the issues that, they can no longer be hidden now. And I think they came to the forefront and they would need to be tackled. What we're doing in CIMB, obviously, we are launching a few policies with that regards. We have a few policies coming early next year to address some of these issues. We are at the beginning of this ourselves. There's so much to be done. In our markets, of course, it was a self-started process. We started this journey ourselves, and then we paved the way for other banks in the country. We were the first bank in Malaysia, for example, to sign up to the United Nations, to the UNEP-FI principles of responsible banking. They used to be called principles of sustainable banking. We were the only bank in ASEAN and also in Malaysia to be a founding member of this. So we are at the beginning, but the recognition there is that a change has to come. The challenges, of course, SMEs, they're not very active in disclosures. They don't publish annual reports. They don't have the data that could be picked up by analysts that easily. So the SME game there is one of a supply chain. We are approaching it from a trade financing and supply chain, and we are working with some government agencies to put that in place because we recognize the trends in the future. And I think, Rebecca, you are in one of those sessions next week with us. There is a growing awareness that supply chain will bring about a lot of positive changes in the S, which is the sensitive part of the ESG.
I think that's a really interesting idea, calling it sensitive, because this sort of cross-cultural thing, we're all trying to find a one-size-fits-all. We're all trying to find a magic bullet here, but actually culturally, a lot of these things are very, very difficult, aren't they? And to what extent are SMEs in emerging markets particularly vulnerable to the complaint that they're not complying with the S part of all of this? Is it something that we can do anything about? Hussam has actually mentioned already the fact that the data requirements for an SME aren't always there and readily available, but there's also an issue that a lot of those organizations have to keep below the radar screen, want to keep below the radar screen, because otherwise the costs become intolerably high. And one of the things that you might find interesting is, just as a piece of context to all of this, we did some work in Africa. The costs of the informal economy are prohibitive. If you look at the costs of trading across borders within Africa, for some countries and the island economies across the Commonwealth, for some of those countries, the business costs of those are actually more than 100% of the revenues that companies get from trade. So it's prohibitive. If we then start pushing up the costs, what are we going to do? So Shona, Roberto, talk about the examples that you've been talking about incentivizing these behavior changes, because it's a big step for companies if it's going to put up costs.
Yeah, well, ultimately, you know, this has to come down to us realizing that this is all of our problem. It's shared, and therefore, by definition, the costs should be shared. So first of all, the costs, you know, through the introduction of technology and better governance across systems, we should, and an increase in transparency, we can actually then all see where the problems lie. Digitization of trade undoubtedly is going to lower costs. You know, the barriers to trade will reduce because of digitization, and therefore, you know, we're all proponents of that, and we need to, you know, keep trying to drive that so that cross-border trade doesn't come with all of the baggage and the sort of those hidden costs. But secondly, you know, coming to let's look at trying to make this much more of a level playing field globally and economically. You know, ultimately it's debt, it's costs that drive people into these situations. If we look at the root causes of how people are being exploited and how people are being trafficked into, and why people are being trafficked into construction sites and factories and brothels and, you know, all sorts of areas where they are being exploited, and sometimes even, you know, working in slavery. I mean, slavery today is a bigger issue than it was 150 years ago. There are more people that are slaves now than there ever have been in history. So it's ultimately it's debt and it's poverty that's driving people into desperation. And as I said earlier, you know, climate is going to be adding to that too. So we have to address the unfairness, the inequality that you mentioned right at the beginning of this discussion. It has to be addressed. So when we come to looking at things like governance and audit and who bears the cost of implementing the types of interventions that are needed, this needs to actually be shared. It can't be borne by the SMEs. They just don't have the economic power to be able to do it. And ultimately, you know, as consumers, we are the ones who are making buying choices. We are the ones who can, I mean, imagine if you walked into a supermarket and you picked up a packet of food, and on that packet of food, instead of saying fair trade, it said made by slave labor. Would you buy that product? No, you wouldn't. But the very fact that we don't know, and that there is this lack of transparency, and all of the onus and all of the burden is being put onto the SMEs, is just wrong. You know, we have to recalibrate this system, and that's what we're attempting to do, or just trying to put in place some of the tools that can help drive this.
I mean, it's super interesting, isn't it? Because you're making the point that I mean, so many points to unpack in all of that. But there's an issue around consumer demand, and I mean, just ahead of this event this week, where we've been talking about all of these issues, we did some work looking at the trade data. And if you look at illegal logging, all of the sectors associated with illegal logging, for example, there is still around the world $11 billion worth of trade each year that is unaccounted for, but that can be associated with tropical hardwoods and deforestation around the world. So we don't know what's going on, but it's not the countries, Indonesia or Malaysia or Brazil or any of those countries, that actually have the highest gap between what they say they're doing and what they're actually doing. It's not those countries that are hiding their trade. It's Italy, it's the United Kingdom, it's France, it's Germany and Sweden. And, you know, those are the big furniture consumers, right? And so, I mean, there's a lot that's going on that we can do to change consumer behaviors, but let's take it back to the issue of how we allow digital technology to help, because Hussam's mentioned that. Roberto, I know, is very keen on that. You're very keen on that. But there's something fundamental here, which is the legal entity identifier for example, legal entity identifier, great thing. Everybody wants to see that. Digital footprint provides some kind of a record of what a company is and who owns it, etc. The problem is that it costs money. And it costs money for the small business. So that's an example of how, you know, maybe we're confusing some of the digital issues, and maybe we need to work on some of those solutions. Roberto, over to you.
Thanks, Rebecca. So what we are trying to do at ADB together with Shona is an interesting pilot. We are trying to see like how can a multilateral help incentivizing the adaptation of better labor standard in supply chain, gaining some better financing condition in the supply chain itself. So it's kind of like evaluating from a data perspective the conditions of the worker in specific factories. I mean, at the moment, this is a pilot, and we're looking at the labor condition, and then eventually see whether an ADB guarantee, so it's ADB, but it could be actually any multilateral in the world in the future, provide a guarantee to kind of support and allow a cheaper financing from international banks into this supply chain. This is like a promotion of a better behavior, and would basically combine the need for transparency, advanced technology, and ultimately with a reward for the better behavior, because to a certain extent, it is true that, you know, one thing that we need to do is bring more transparency to the supply chain. So Shona says, if you knew that something was done with child labor, you probably wouldn't buy it. And at the same time, trying to financing it, and provide some financial incentive so that better behavior is supported, and so that the supplier themselves can change their mindset and see like what is the burden and turning into a potential opportunity. Again, the pilot that we are looking at is specifically at the moment in India, ready-made garments factories, but the concept itself, if it will be successful, and I cross my fingers for it, could then be transposed easily to other industry, other geographies. And I think these type of technological application is what we really need to incentivize, because we kind of build up more standard, we kind of build up more understanding, and ultimately it would have a direct impact on society. So it should be highly incentivized. Yeah, that would be my...
I mean, it's an amazing project. Hussam, is that something that you're seeing with sort of the positive incentivization, understanding what's going on the ground, and then using positive pricing for promoting behavior change? Is that something that you're working on, interested in? Is it relevant in this space? Definitely.
I mean, however, I mean, in this current environment of post-COVID, at this stage, we are not yet post-COVID. We are still in there. Priorities of a lot of these SMEs is wait and see. Let's just survive now, and then let's see what's the best way to recover afterwards. Most of these SMEs here are gone through government's moratorium of debt repayment, so they are basically waiting to see what will happen once that ends, and whether the sales will recover, whether everything else will recover. But what I wanted to mention here is, you see, the S for SMEs, majority of SMEs are, probably less than 50 employees, especially the micro and the small. In most cases, they very either a family run, or they're very transparent in a way. It's those the problem becomes more apparent when you deal with corporates who have multi layers of supply chain. So you'll have a vendor and a vendor, and then a vendor to that vendor, and another vendor, 3 layers of vendors, and then that tends to be an extremely complex way to verify. So the corporate may be isolated or insulated from that. They may acquire all the certifications and have all the necessary policies in place that they only buy from those vendors that adhere to certain practices and standards, but the lower layers as you go down may not be that compliant. So that's when the incentive becomes apparent, is how do we get the corporates, the exporters, the multinationals to start thinking about, you know what, there is a system in place that will trace all this. It will trace it to the raw material. It will trace it to where the basic ingredients of your products come from. Maybe not now, maybe in 5 years, maybe in 10 years, but it's coming. This is what Shona was mentioning, the data and the systems in place that will trace all that. Then they'll have no choice but they take that responsibility to go down and educate the SMEs in all the layers if they wish to continue to be on their supply chain network. So this is what, the responsibility. One of the other challenges is the responsibility. Whose responsibility is it? How far can we as a bank can go to educate and incentivize? How much will the regulator allow us to do so? How much of the responsibility lies with the corporates, with the exporting manufacturers? How much is it with the consumer? If there is a hike in the price as a result of having the fair trade label, for example, it's slightly more pricier than the one without the fair trade label. Now, some markets will be able to afford it, but not everyone else. So how fair is fair trade then becomes, how ethical is ethical labeling then becomes. It's because there's a responsibility shifts. It becomes the responsibility of the small farmers. It becomes the responsibility of the very small, the one at the bottom of the SME layers, rather than those either the consumer or the corporates or the ones that are really. So we need to trace the pricing mechanisms here. We need to say the end product, the price of the end product, where is it? What are the ingredients? Who is paying for the social externalities? What are these social externalities? Are we accounting for them? No. We are just about to educate ourselves about environmental externalities because there's pollution, it's easy. Putting a price to that is a challenge. But then what about the social externalities? How do we put a price to all these bad behaviors?
Tony, you're gagging to come in.
I'm gagging to speak. Yes, because I wanted to address exactly that point. To say that it is possible to find efficiencies from within an existing supply chain that can allow for those costs to be taken out and the benefit to be redistributed back right across all the way to the smallholders. And the reason I'm saying that is that we actually demonstrated in a big, essentially demonstration pilot 2 or 3 years ago in Malawi, working with Unilever and smallholder tea farmers. We demonstrated that by using technology, we were able to, let's say, re-engineer the way that financing could operate, reduced significant cost out of the supply chain financing, and then we're able to channel that extra benefit or that extra cost that was found. We were able to channel it back to the farmers, the very farmers that you're talking about, who at the moment have to bear all of the cost and try to keep up to the standards that are being demanded at the end of the supply chain, the other end of the supply chain. So you can use technology to actually find cost savings. And then if you bring in organizations like the ADB, or even banks being prepared in any way to change the way pricing works inside that supply chain, you can actually get the product all the way to the consumer without having to add additional cost. You've made the product fair, it doesn't cost any more. So it can be price neutral simply by taking inefficient financing costs out of that supply chain. And it is possible to do. But I would also argue back and say, I think there is a lot of overconsumption, definitely in this country. People will go out and buy effectively disposable clothing because it only costs £3 for a t-shirt. Well, if they think that, oh, that £3 t-shirt, actually, it came with blood on it. You know, there are people that have suffered, the environment has suffered to get a £3 t-shirt to me. There's no way that a t-shirt should cost £3 to make. It should cost £10 to make. And people need to consume less and value their products much more than they do. We live in a disposable culture, and unfortunately our economic model, again, is built to encourage people to continually consume, you know, in order to underpin profits. I'm not going to, you know, I'm not going to go on to a rant, but I'm just going to say that it is possible to restructure the way that the money moves inside supply chains in order that people and the planet are not being exploited.
The pricing will be the challenge, of course, because and the accounting standards will be a challenge. How do we capture that? How do you translate all of this into an acceptable, globally acceptable, you know, without damaging certain markets and certain economies? So that the challenges are real. It may be applicable in one place, but will it be applicable everywhere else? I think it's moving in the right direction. I think it will happen. There will be some teething problems in the next 5-10 years, but there's no other option.
I think it's the fact that there's no other option. And Roberto, I'll bring you in a minute, but I will also encourage the listeners to come in and the audience to come in with questions as well, because we have 3 great experts here in this space. So do pick their brains as much as you want to, because it's a fantastic subject area. But Roberto, number one, we all need to work together. Number 2, we need to make sure that there isn't one size fits all. Digital is a big solution to that, but the critical thing and the critical point that Hussam is making, I think, is that this is going to take time. We have to tell people what we're doing, that we are moving as a sector towards something that is more sustainable. But it's well, you're Italian, so you'll understand Rome wasn't built in a day.
No, exactly. So, well, there is a lot of education going on at the moment, more than there was 5 years ago. I mean, if we look at what the banking sector per se was doing 5 years ago in the space of sustainability and what's doing now, there has been a massive improvement. Now, people might say it's not enough, but we need to acknowledge the policy, an overall positive change in attitude and interest from most of the financial institutions on this topic. Now, when we are doing our pilots or initiative, when it comes to the discussion with international banks and with national banks, obviously we get different type of reaction. Now, in the discussion with the international banks, there is still an understanding and willingness to work on the sustainability side and try to develop more technology. But at the same time, it's kind of how that trickle down in practical terms, I would say to a certain extent, is still not 100% clear. So there is a commitment in terms of strategy and ideology, but the practical side of things is still being developed of what exactly does it mean to work towards a sustainable trade finance strategy. That's the feeling I get. I mean, there is a good intention. I think we need to move down the strategy into more like a tactic to kind of tackle practical element. When it comes to the national banks or smaller banks operating, obviously they find themselves having less of a resource to focus on this, and to a certain extent they focus more on what the regulatory requirements are in the specific country. So it's if it's not illegal, then it's okay. And that I would say it's not per se a wrong approach, in the sense that they've got maybe limited resources to allocate them accordingly. So I think one of the elements that the multilateral world needs to do is kind of try to connect what the regulatory requirements are and the needs from the societal perspective to what the targets are from the different banks, and try to see how to build the bridge between the two, so that the regulator come up with regulations that actually are achievable at financial sector, and that at the same time that the financial sector is able to explain to the regulator what the challenges are in terms of practical application of the regulation, because to a certain extent, if the two elements don't communicate, if the banking sector and the regulators don't communicate on a regular basis, we risk to have a disconnect and end up with certain requirements that are not practically achievable by the industry. So I think that's an important element to be considered going forward. There is like a lot of activity here in Europe when it comes to the S side, and kind of like there is a potential of more homogenization of how supply chains need to be like audited in terms of where the labor component comes from. So I would say that in the next year or two, we'll see more clarity about how that interconnect with emerging markets, and whether the resources of emerging markets are being taken into account is a different question. And there needs to be like sort of facilitators of this negotiation. I would say last but not least, for example, there are very, very valuable initiatives. Like earlier this week, the ICC finally presented the sustainable trade finance definition. Well, it's an introduction to the sustainable trade finance definition that will lead to the creation of the same. But for example, like other bodies such as Asian has been looking at sustainable finance taxonomy. So how do we ensure that these initiatives are actually interconnected, and we build something that is modular and inclusive rather than something that is more dictated? And then I see like very positive development, but I would say that we'll need a bit more of interconnection. So at our end, for example, in ADB, we have been connecting the ICC with the Asian to ensure that there is a homogeneous discussion. And more initiatives such as this needs to all be interconnected. But overall, when the industry bodies of this relevance manage to come up with some sort of like overall standard, and the discussion with the regulator becomes simpler and more consistent, and it's definitely of help.
I think there's a really important point there, and I think it probably matches together what Hussam has been saying, what Shona has been saying about, you know, the fact that we've got, in a sense, this is being driven by consumers, by a sense that this is the right thing to do in developed markets, and the danger is that we force a transition, an inappropriate transition on emerging markets that actually leaves people out of supply chains in the future because they can't comply. And I mean, I've used this example this week several times, but I'll use it again because you guys haven't heard it, even if the audience has. The example, it ties everything together, because Hussam was talking about the one buyer, multiple suppliers. You don't necessarily know who those multiple suppliers are in your supply chain. They're getting stuff from somewhere else. So you can see how the exponential growth across all of these supply chains works. And the example that I give is a company that we were speaking to, whose client was not a financial services company, but the client was saying, well, we want to clean up our act, we want to make our supply chains more sustainable. So these 1,500 companies that we have who are palm oil manufacturers in Indonesia, we're just going to take them out because they're not complying with our sustainability criteria. So the point that we've all been making across this whole space is, I mean, number one, that creates Shona's problem, it creates Hussam's problem, which is it perpetuates poverty, and therefore going underneath the radar screen, and adaptation becomes a very difficult thing to do. And I think one of the things is we all have a collective responsibility here, don't we? So from that point of view, because we all have a collective responsibility, I guess my question, Roberto, is you're working with regulators. Do we also need, and the ICC's standardization is beautifully simple. It could have been written by an economist. It's beautifully simple, and I completely subscribe to it because it's a really good starting point. But do we then need to get the World Trade Organization involved, in the United Nations? Are we in a year's time effectively going to be looking at having a COP26 equivalent for trade and trade finance? Is it that global an issue? Do we need to bring all of those stakeholders together?
I think the ICC is leading this project, VGC, so they'll be the best one to comment. But my understanding is there has been an involvement of organizations such as the UN in their work. So there is an understanding of the fact that in order to make a real impact, you need to bring in and involve the big guys, because the negative impact. So ADB has been very vocal about the trade finance gap, right? And when back again to the AML earthquake that happened a few years ago that led to a lot of banks exit, especially from emerging market, ultimately doesn't erase these entities from the world. It needs to keep going, but they will go to the black market. Now, different region, different, so but they would still get the financing that they need, but they would have to go do it outside of the banking system. That's definitely not a better looking statistic. Doesn't mean per se a better looking situation. And
like GDP growth.
Exactly. So,
Yeah.
so we need to be very careful. So yes, and I think we are in the right direction to develop that. As I mentioned before, there is way more acknowledgement in international bank of this importance on this topic, and we will try next year from an ADB perspective to kind of start applying all the definitions that are coming in the industry across our portfolio to ensure that we kind of support more of the sustainable trade. So we're going to try to lead the way, and definitely following that, we will try to help educating the banking system in order to how to do that at the same time. I mean, it's still being developed at the moment, so I don't really have a resolution black and white, but it's definitely something in the making, in the pipeline for us, and it's really, really important.
Brilliant. Shona, there's a question for you coming through here. And I think it comes back to the point you were making about, well, we've all made about consumers, but for example, is Zara any more sustainable than Shine? Because Shine has a cheap t-shirt, and so we say, oh, that can't possibly be sustainable, but Zara is slightly more expensive, so it must be more sustainable. Or are we just being social washed into thinking prices higher equals more sustainable in every sense of the word?
It's a really excellent question. So a few things I would say is, well, number one, we obviously pricing differential isn't entirely around, how it's produced. It's also to do with the quality, of the actual product as well. So a higher quality product would obviously, command a higher price. And I'm not going to make any comments on comparing one corporate to another, but it ultimately is about transparency. It's about visibility of that supply chain, the consumer demanding that we're given the information, demanding that we can see, so that there this opacity and these layers and these curtains that people can hide behind are thrown open. And actually, I wanted to say that the regulators have a really important role to play in all of this, and we can see the new due diligence law that's been implemented in Germany is really going to start making change happen. The EU, human rights due diligence and transparency laws that are about to be implemented, I think in December, I think they're coming into law. That is going to be absolutely critical, because the onus is going to be on the corporates to make those disclosures, and not just to make the disclosures, but actually to take proactive action. Just reporting is no longer good enough. There has to be proof that they're actually taking action to try and change the status quo and to bring about that transparency. So.
Hussam, just on that, are we pushing too much down to the SME at this level?
I don't think SMEs are at the moment we'll be pushing too much on the SMEs, but the reality is SMEs make up about over 98% in some economies of the total number of businesses. Big supply chains, the real manufacturers and components, ingredients, all come from SMEs. And it really is about how do we ensure that those SMEs are not damaged by any unrealistic expectations or one-sided expectations. Everyone has to play their role. And I really don't see it as just SMEs or regulators or the government or the consumers or the banks for that matter. Everyone has to play their role. I mean, like what happened now with the environment and climate change, and everyone is now, there is a COP26 for the environment, for climate change. Everyone knows what the target is. Everyone speaks about the 2 degrees Celsius, the 1.5 degrees Celsius. A lot of people know about the scenarios if we go to 3 degrees and what will happen if we don't go to, everyone is alarmed. But the social aspects are also as dangerous and as damaging to the social fabric of society. And we need probably some attention. You know, I mean, this is one of the articles I read in Harvard Business Review. It says that the S in ESG suffers from the middle child syndrome. That, you know, attention is always given to the elder and the youngest, and the middle child is always like, oh, later, or I mean, I'm a middle child myself. So so that's the issue here, is that we don't want the S to be neglected, or just, you know, it's the SMEs or someone else will do it. It really needs that much attention as the environment and the climate change, because society is not, it's not just the climate change or the global warming that is at risk, but society is, you know, facing disintegration. You know, there are many challenges we're facing now as a result. You know, digitalization, for example, we say that the digitalization is good in terms of cost, but then it has a social impact as well. It has a social impact on employment. It has a social impact on supply chains. It may create another inequality between different economies. All of these challenges need to be addressed. And I think the fact that we're discussing it here, and thanks to you for highlighting this and giving the S a session, it's a step in the right direction.
Well, I'm very passionate.
I don't think it's an S. I don't think it's the S is the SMEs only. I think everyone plays a part in this.
Well, what you're saying, Hussam, is it's exactly the problem that we've been talking about in relation to environmental issues as well. It's all interconnected, and we all have to do this together. And there's a question coming through here from Hannah that's about actually the core of the problem, as far as I can see it. So it's about the fact that retailers, particularly in clothing, have actually altered their supply chains. So over the last 20 years, we've had the introduction of automation and just-in-time supply chains. And so, you know, Zara can run a supply chain over a 6-week period and then totally change its stock over, because the technology enables them to do that. And maybe they're using machinery that is too expensive. So they can move to, they have on that model to move to somebody or a supplier who's incredibly cheap. That pushes down the transparency down to the lower levels. So is there something we can do about that? Because that's creating a lot of waste. It's creating a lot of pressure on the lower end of the supply chain. And how can we measure it? I mean, is that something that you're looking at? Shona.
Can I just, yes, I'd love to take this question, because as you say, it goes right to the heart of let's say the stability, the economic stability of SMEs. If they don't have any certainty that their contract with that end retailer is going to be in place for any length of time, they're never going to invest. They're never going to be able to go to their bank and say to their bank, we've got this fantastic new contract. We want to be able to go and buy machinery. We want to invest in our business. We want to look after our people. If they don't have certainty that that contract is going to be in place for any decent length of time. And the problem with fast fashion is, you know, the switching of suppliers. They have the suppliers have no confidence in being able to actually invest, because next month, you know, that contract may be pulled away from them. So stability of contracts, looking at contracts as being 2, 3, 4 year contracts that have conditions built in, conditions like the ones that we're working on in our project with in India with ADB, where you are tying finance to conditions and then performance. So if you tie it all together and you put a proper structure around these types of contracts, you can get access to finance, you can get investment, and then we start to create a much more level playing field for SMEs.
There's tons of questions. One more perhaps, and then we will wrap up. But this is coming through as well. And again, let's open it out as well. Are we prone to the economy of sameness by subscribing to a mode of dress that comes pre-approved by others? For example, reality TV contestants. There's a really important element of all of this. You know, we've got reality TV, we've got models who are standing up in Boohoo, Pretty Little Things. That's the way that looking like those role models, those influencers, etc., that the cheaper end of the market is the way you achieve that. So what do we have to do to change? Do the social media influencers need to get involved in sustainable supply chains?
I'd love to take this one, but I'm going to give the guys a chance.
I think that was directed to you, Shona.
Sorry. Oh, okay. So, so my view on this is, well, fashion ever thus. Humans love to be fashionable, don't they? And they always have been, all the way back through history. So I think it would be very hard for us to say people should stop being fashionable and should stop being influenced by others. I think that that would be a somewhat authoritarian type of view. My own personal view is if people can think about consumption and think about not buying disposable clothes and just making them last by buying better quality and mending clothes instead of throwing them in the bin. I think that would be a great place to start. But I think it would be very difficult, particularly for young people, to say to them that they're not allowed to be influenced by social media.
If I may, at my end, I think it's more like, I mean, the newer generation actually do seem to have like a more of an understanding of what social and environmental problems are than we would have seen in past ones. At least that's my feeling. I think what we owe them is the transparency for them to make the decision. So like, as Shona mentioned, like if it was clear somehow that T-shirt A has been done with some, let's say, less human conditions and T-shirt B is done with more human condition, probably the newer generation will go for option B. And the same, it's not just applicable to ready-made garment. That's what I was saying before. The pilot with Shona is an example in the ready garment. But for example, if you go to a fast food and now you can have like the meat option or the what's called the fake meat option, right? And then if there was an option there that says, okay, this is the impact on your health and this is the impact on the environment of option A versus option B, I'm not, we need to tell people what option to pick, but we owe them to give to show them what are they actually picking. And I think like as you have health impact on yourself kind of condition when you pick a food, now you have the calories and so on and so forth. It would be also good to have some sort of KPI that say this was the impact of the production of this on the overall society, environmental, social. I mean, I'm talking about like, you know, probably science fiction here. It's kind of like something in looking at the future, but I think we can't replace people's choices. What we can tell them is what their choices actually are.
I think that is a brilliant point to end on. I'm super grateful. I would love you all just to give a 30-second overview. In a year's time, and we will be here in a year's time, talking about the future of strategy, what we need to do for the next 12 months. What are we going to be talking about and what do we need to do between now and then to get there? Hussam, do you want to start?
I will start by saying that in a year's time, I hope we would have reached some clarity on definition of what makes sustainable trade and sustainable supply chain. What are the standards? Where is we can see some sort of roadmap towards some standardization agreed upon that will highlight and raise these issues. Also, you know, we are as humans consumer by nature. We are consumers, and just a matter of learning how to control that desire. Perhaps is cost and pricing is one way of doing that. And I think that the element of cost in the supply chain also needs to be looked at. That cost of externalities, social externalities needs to be looked at, but perhaps that after we find the definition and agree on the way forward. Thank you.
Thank you, Roberto.
So in the next year, I would hope that more financial institutions and like partners and bodies involved in the supply chain give it a try to try new technology. We need to turn what's like, let's say, theoretical more into something practical. So like push for like biggest banks, companies that have the opportunity, support new pilots, support new technology, try some practical solution, and then this will definitely help the development of the industry in the right direction.
Cool, thank you. Shona, over to you, last word.
Thank you. And yes, I was just thinking about SDG 12, which I'm sure you all know off by heart, but that is the one that actually addresses responsible consumption and production. And to me, that's, you know, that is absolutely at the core of everything we've talked about today. I would really like to see SDG 12 printed in everybody's brains this time in a year. I would also like to see that our pilot that we're working on with ADB actually has taken a life of its own and has demonstrated that it is possible to bring transparency and incentives into global supply chains, and that we can actually make a difference to people's lives. That's what I would like to see a year from now, and that, you know, that the regulators and the industry and everybody absolutely supports, you know, this goal towards leaving no one behind, and ensuring that, you know, we all live in a fairer, better world.
Wonderful place to end. Thank you so much, all three of you, for an amazing session. I get the feeling we could have talked for hours, because this is just brilliant, to have a session just on the social. What's interesting for me is that the messages are the same. Let's all work together. Let's make sure we prioritize. Let's integrate the supply chains. Let's use the technology to provide more information, more education, and more hope to people who want to be able to make a difference. Thank you so much. I'd just say to everyone who is on the call now, we start again at 12:30, wrapping up the whole of the week's events with Caroline Stockman from the Association of Corporate Treasurers and Sanjay Tiwari, who is from 21st Century Education, formerly from Maersk, and he's going to talk about how we train people to become sustainable in the logistics space. So thank you very much indeed, and wrapping up, of course, with Daniel Schmunt. Thank you very much indeed. Really look forward to the rest of the session and to keeping in touch with all of you. Thank you.
Thank you.
Thank you.